Hey, what's going on, guys? It's your boy MC Fire. We're coming at you again with another Fireside Trades with me. This is your boy MC Fire. We definitely saw an eventful trading week. A lot of good, juicy things came out for the week. Definitely break down what's coming up next on the weekly breakdown. It's basically setting up which potential trades could be for next week and what to expect really for next week. So let's kind of dive right into it. Not going to waste too much of your time, so let's go. So right here out the gate, we're going to start off with silver and gold, and then the Qs and spot. What we're really trying to break down is what potential plays we have for the week. And I'm starting with silver because after a massive rally up to 29.56, a pullback to some of the rotational levels and the 8 period moving average is warranted. Now, I'm less worried about the 8 period moving average, more worried about the rotational levels, right? On the daily chart here, what we ideally would want to see is potentially a buy trigger. That buy trigger would happen more up here to be above the 8, but the reality is silver is kind of one of those mixed bags where with the move that it's had and the massive attention that it's been getting, I think it only goes sideways or up from here. 26.43 being a major level. So this being its new support could be a potential for buy. Gold kind of running in tandem here. We're gonna run to kind of gold futures, but it's very very similar. Seeing that this rotational arrow, I'll draw it out for you guys, is kind of being set. There could be just this could be the new zone, right? Now, of course, I could be wrong. I could trade back down and get back into these levels. But my thinking is, yeah, gold is kind of probably going to stay at these new levels. There is a lot of wool in the market, and the fundamentals make sense for there to be more buying of gold. Foreign banks are buying gold at unprecedented rates, and this only will put pressure on if there's a limited gold supply. That these foreign central banks that have a lot of spending power would look to snatch a lot of that up and take advantage of that. So just something to keep in mind. If you're a gold and silver bug, that's good for you. That also reminds me, take a quick look at it. Same thing kind of for the Bitcoin. Even on the daily, we're noticing that this rotational level is being established for the weekly. For the daily, this is kind of what it looks like. It really kind of a little dip below here, but other than that, it's basically maintained its rotation. That's really good if you're a person who's into Bitcoin or worried about the instability. When I say things haven't really, like, there might be major moves in the market uh, from the headlines that people get super excited, but when you really look at where Bitcoin is and where it's kind of gone and where it's going, you can kind of notice that Bitcoin really doesn't go anywhere new until it gets below, at least on the ETF from BlackRock, 53.36. So that's kind of a level that I would eyeball. If it gets kind of below that, if you have any plan in place to limit risk, that's where I would execute that at. We did kind of scale into a little bit more of Bitcoin here, anticipating some of the rotation, but after we saw it's bouncing off this intermediate rotational zone, you can kind of break up rotation in different ways. And so we decided the weekly rotation is here, but if you're looking at daily rotation, this is a zone to be concerned. So we kind of marked that in yellow. And so we took, based off of those levels, kind of took a buy. It's worked out okay so far, but who knows, really knows the future. So that covers mostly the woeful stuff. I guess the things that people are hedging against, maybe this, right? The Qs, the SPY kind of being a little bit of inflated. And inflation does have a little bit to do with that, not just this market being a little extended to the upside. Do I believe that there's potentially more upside? Well, I believe it's more sideways action as opposed to just going straight up. Of course, who knows? But on the weekly chart, what I really want you guys to note here is the fundamentals. Really, the fundamentals are the biggest thing. If the market continues to stay within rotation, I don't know why I put this guy here. He should not be a weekly rotation. There we go. If it continues to stay inside rotation and break rotational levels and trade rotationally at those levels, I don't expect those levels to be broken very easily. I expect those levels to, at minimum, you go sideways until there's maybe more buying pressure to the upside. So it's just something that you should think about. Don't necessarily say woe is me. Look at where the rotational highs and lows are, the support and resistance levels, and if it's breaking those levels, then you can assume, let's say for example it breaks this 40 60 53 level, then I can assume that within a medium time frame, which is maybe 2 3 weeks, that we could risk as low as 4 6 61. If you see this level break and it has the potential to complete rotation. So don't assume that, hey, it could bounce off this invisible line. Stick to the fundamentals. If it breaks this line, assume that it can go down there and act accordingly. Don't wait, but act accordingly. Okay, just something to think about when you're dealing with stuff at high. So we're gonna kind of we're gonna transition a little bit, get into some of the plays, look at some of the ETFs for the week. But before we do that, we definitely want to bring in sorry for the flashman. We're definitely going to bring in the FedWatch tool as well as some of the charts. So going into next week, sorry for the bright light, but we're throwing it on here. This is very, very valuable stuff. This is your CME FedWatch tool, while tracking that kind of estimates and tracks what's going on behind the scenes with the interest rate. Right now, interest rate is predicted that for the next meeting, which is going to be the 12th this month, that interest rates stay about the same. That's, status quo. And why that is important is because this basically lets people know, the interest rate basically lets people know at what rate can you borrow money. If borrowing money is expensive, people are less likely to do that. Now, some people will say that kind of slows growth, but it does stop overwarrant spending. And that's kind of what people are worried about. If you increase velocity, what you don't want to have happen is prices increase based off of supply shortages that they're claiming are from COVID, and those are the transitory inflationary increases. The more permanent increases are obviously, people taking out loans and all this other stuff on stuff they don't need, or necessarily a lot of money sloshing around in the market. And if supplies dry up, that also causes inflation if there's very warranted spending. You're seeing that kind of in the housing market and in other markets too. So this right here is very, very important. They're saying that it won't change from its current rating going to the 12th of this month, and it really is not looking to you see a major change or potential for major change. It's saying there's a 52% chance, even in September, that it doesn't change. There isn't really a major dig the other way till around December. Towards the end of the year, when you're looking at a lowering of the rate of 41% and even potentially lower than that. So just something to keep in mind on what's going on with your current interest rate. This is a great tool. It's free. You just go to the CME FedWatch tool. You just type that in Google and you're there. Coming up on Forex Factory, though, for this week is, do we have anything major? It doesn't. So I really just look at the red stuff for to see really the U.S. and if it was so. Why this is important is typically if you've ever experienced some days that are just like absolutely massive volatility out of nowhere. Maybe the week was slow, but this day none of the fundamentals of the market work. Rotations just being wonky. You're seeing the VIX climb from like maybe 12 to like 15. This is probably why. You have certain Fed meetings that impact the market, and people with a lot of money and a lot of make big decisions on those days. Whether they get in or get out of the position, it's irrelevant. We don't really care. We just care how the market reacts. And a lot of times, if you don't have professional tools, it's probably just better to avoid trading. My rule is on those days, I almost don't trade unless it's an asymmetrical setup. I'm not going to take any credit spreads or anything like that because it's just that violent. Definitely no day trades. Maybe an asymmetrical setup that would profit off this massive volatility, these days are great for that. Okay, especially your butterflies, the way we set them up. So, that's coming up on Wednesday. If you trade the British pound, Tuesday is a day you might need to watch out for. And then Thursday for the U.S. also is a day that you might want to watch out for. So Wednesday, Thursday, and Japan, you also have a major press conference. So if you trade the yen, it's something to look out for, right? That next week is definitely going to be a doozy. So you seem to be free and clear on Monday and Tuesday, and outside of there, it's the Wild West, baby. And so when we're looking at kind of what plays we want to investigate, I typically like to start with this chart just to kind of see how the market ended, what's rotation, what's kind of above average, and see if there's any major sector rotation. I know last week we were kind of looking at real estate as potential buys, but has kind of these would be more in the area of long-term buys what we're looking at. But if we're looking at just a week time frame, a weekly time frame, I'd be looking something in potentially materials or even financials, right? Basically big purple. So let's see here. I think that is, yeah, financials. Financials. Then you have healthcare, and then you have excuse me, financials, tech, and communication services. So those are the three that's kind of above average that you could potentially see. Really financials, and I'll show you that here in about two shakes of a lamb's tail. I really believe financials has some of the best potential across the board for pushing. It's not overextended. Um, it's not overextended, and really the items in there are all kind of in sync. So we'll go back to the charts here, and I'm definitely like to show you guys that. We'll pull up our flex grid here. We've got this bad boy pulled up, but really what we want to do is, let's see here, we'll keep that as it is, and we'll go where are we gonna start? Cool. We'll start with XL. We'll start with XLF. We'll start there. Boom. Cannons. All right. So XLF, if you notice, not too many underperformers. I mean, you can take a snapshot right here. This is all on the weekly chart here. So we'll start with the big boy. I don't know why it has all the empty space, but anyways, XLF, if you notice, this is a weekly chart. So from a fundamental standpoint, you see the potential weekly rotation. If it breaks above here, you're looking at kind of rotating into the highs. Um, It'll be in that weekly high rotation. So what do I mean by that? This rotation, it would be approaching the highs essentially. That's all it really means. If it breaks above this week's candle, or last week's candle, I should say, it'll be in the upper weekly rotation, and that way I see a lot of potential buying pressure from the other units inside of the XLF. If you notice that, we'll kind of open this up here to see some of the highlights. Berkshire Hathaway, shout out to Warren Buffett. Um, Berkshire Hathaway is kind of doing this rotational thing the same way. It is in a very clear defined uptrend, and looking poised to push at least to approach highs. So there's that. And then when you look at MasterCard, fundamentally the company is pretty sound, especially with cash. I could potentially see a buy trigger here. So I'm actually going to lower this a little bit, because this week has been kind of a godsend for a buy trigger, nice deep. So if it kind of comes out of there to the high side, you could potentially see a lot of buying pressure, people looking to get at MasterCard because of the great fundamentals of the company. They have had a pretty good increasing dividend and decent returns for a very long time. So MasterCard fundamentally is a really good company, and I think we're going to get tools to kind of break down the fundamentals of certain companies in these ETFs to do better research. That video is coming soon. I'm really excited about some of the tools I've been researching, and we're going to bring those to you guys to show you how we can better pick certain individual items for dividends, fundamentals, and holding your portfolio outside of your ETFs. Remember, Your ETF portfolio needs to be about 80% to, it kind of depends on where you are, but for us, it's about 80% of our portfolio. 80 to 90%. The other 10% is like one-off plays, like one-off options strategies, and some companies that we do see as valuable moving forward that add dividends or have really good fundamentals, or name brands, right? So MasterCard is one of those that has really good fundamentals. It is like the only one in here though that is kind of in hot water, kind of neutral, double yellow on the momentum, on the trend. Everything else though in this, except for SPGI, which is also another crowd favorite in the internet space. People really like this for a long-term buy and hold. SPGI, excuse me, for a long term buy and hold. But all these other ones are double green, and they're kind of resting on their, like, I call it the springboard. Let's go look at Verizon and see what I mean. This is kind of a springboard. When you start getting these moving averages kind of get nice and juicy and tight, and it starts bouncing off of them, it's poised to spring out of that and fire away. You see that here, it springs in. Some people call it a squeeze, but when it fires out, it's like a springboard. Comes back, gets real nice and tight, fires out of that, comes back, gets nice and tight, fires out of that, and sometimes you get these big long runs. Don't expect it all the time. Get your 3 week play, keep it moving. I think even one time we bought, sold a little low, and it launched, right? I think this was a day trade of sorts. So had it been on the weekly, you would have seen it, and we would have seen a 3 week play punching out of here. So keep a note here that it could potentially be doing the same thing moving forward. It's in the springboard, and a lot of them, if you notice, are in that same breakdown, like JP Morgan, Berkshire Hathaway, Verizon. Um, Little tighter. This springboard is not as tight, so I really wouldn't classify this one, but it is in the upper third of the play, which has a lot of potential after this dip to maybe continue, especially if the XLF and its weighting kind of pushes everything up. You're seeing all these double greens, and if you start hearing like, hey, that's why I have all the alerts here. If you start seeing this, all these alerts go off in the XLF of it breaking highs, then you're like, hey, man, the XLF might be a good buy. Goldman Sachs is another one, very nice, tight. As time goes on and it kind of stays in this tight range, I'd be looking to take something like Goldman Sachs, potentially to the upside. It has a very nice pullback, but has since stayed within these top 2 rotations. So if it breaks back above into this upper rotation highs, I could expect it to at least test the highs, see what's really going on. But as we click through here, same story, double greens all the way around. Citigroup, change of trend. That's another thing too. This was in a kind of downward drudge, I would say, then break, and then a complete change of trend in 2023. So any play pushing out of here would be really, really nice for Citigroup. And there's the XLF. So we pretty much went through most of that pretty quick. Sorry about us going through it pretty fast. We got a lot to cover here. So XLU is another one I want us to take a look at, because this sector for the utilities, there could be a couple good buys. It's not as good as anything in the XLF, but if you notice, there is some double green here, not necessarily like the XLV. So you can notice, hey, this has pushed, but it might be at the end of its lifespan here. We'll go straight to the XLU and take a look at that. So when I'm looking at uptrends, I don't really like to see these giant, like, major pullbacks. What I think of is something like this. So once it, like a giant red candle on the weekly, I expect with some follow through. That's when I'm even on an uptrend, I would expect it to kind of do some follow through. If you have a major just red and like very enlarged weekly red candle, that's taking out this kind of rotational range, I wouldn't expect it to necessarily bounce off of that. It could. We don't really know the future. So what would I be looking at in the XLU? We're looking at EXC. We'll go ahead and break that. This is down here. EXC, very nice. For potential breakout to the downside. If this continues to If this sector continues to go to the downside, you could definitely see the weaker parts of the sector break out. Already there's a sell trigger here. So any kind of lower than that, you can almost potentially see a retest of a low. That's my guess. That's what I would want to see. Break here, test a low, obviously, stop out previous week's high. That's what I would be looking for up for a play. The reason why I would throw this in there as a play is because if you've got everything to the upside, you don't want to have things that are super correlated in the opposite direction. This is kind of not really correlated to the Qs or anything like that, the SPY or anything like that. So having this play in the bag, there's already weakness here, regardless of what the Qs, what the SPY is doing. We have a play that's going in a different direction. It's not correlated. So we don't want to have everything in the same boat is basically what you want to say. Same thing here for XLE. If you start seeing it testing this rotational low, and I will go on the daily chart just to kind of show you what I'm talking about. As you see here, it's kind of rotating up, but if you start seeing it test these lows, break this low, I could potentially see it break, retest of that level, and then push back down to the downside, at least to here. So what am I talking about? You have a rotational level, you see a break here like this, and then just dumps. But before it did that, it was rotating between here, down here, and up here. It was very clean rotation. That break, the market saw it and was like, gone, dude. I could see that potentially happen here. So if it breaks, it could retest the low of lows. Okay, that is something that we're looking at. I'm actually not hoping for that, but if it does, it is a play that we could take advantage of. Um, on the other side of the question, Duke and Dominion in the same category. So Duke is double green, and I believe Dominion is transitioning. So we'll start with Mr. Dominion. Dominion here, you see a change of structure here, even though there's weakness, and that's because the whole sector kind of got pulled down, and you see this candle kind of show that that's the case. If you can go honey badger, basically, if you can break away from the sector, if the sector goes down, I could potentially see this as a play to the upside. Fundamentals might have changed, news might have changed, but seeing the change of structure after being in a prolonged downtrend, there could be buyers stepping in and wanting to take this. Let's see. Oh, here's Duke. Perfect. Also, same thing. Duke change of structure. It's got a double green, and its last pullback, it was more neutral than at the bottom of rotation. So relative strength as it compares to the ETF, a little bit stronger. I wouldn't necessarily want to buy highs. It's just something to think about. If it breaks high, has a pullback, then we'd be a little bit more interested. It kind of did that at this level, broke highs, had a pullback. This would be a good time to take the purchase. Uh, a week ago, right? Not right now. So is this something to think about for keeping you guys abreast on that? And then we'll pop into the some of my favorites. We'll go to the XLK and the semiconductors. Okay, so as we go to the XLK, another thing I want you to know, XLK is pretty much in line a lot with the triple Q. It is the technology ETF. Looking for some laggards here. So these are all, again, I believe all the weekly charts. If I change them, we'll go maximize. Yeah, so this guy's in the weekly chart, but I'm noticing, again, in the topper part of the rotation, almost approaching the higher part of the rotation. We are invested in the XLK in other forms, primarily via the Qs, which have a lot of similar names. Correlation is probably in the 90s. So just kind of keep that in mind. Microsoft, though, Microsoft basically generating a not quite a buy signal, but I wouldn't wait for it to break highs to want to buy. Breaking the 8-period moving average, and after testing the 21, it would pretty much be a buy signal, what I would consider a buy signal. If you go to the daily chart, this retest break is kind of what you would say for maybe the next 3 days if you were going to take a weekly trade. So just something to think about Microsoft as a weekly as opposed to a multiple month 3 weeks to multiple months, that could be a potential play, right? We don't do a lot of 3-day plays, but once this happened, where you get this break, retest of the low, that, and then break above the 8 period moving average on the day, that would be necessarily nice. There is ways to put higher time frame moving averages on a lower time frame chart. We got that from one of the training classes that we were a part of, and we got that download. I'll reach out to them and see if we could share that with you guys. If that's something you would like, but it's been super helpful for being able to take trigger buys on smaller time frame, but really make yourself super nimble and like tactical down to the T if that's something you're looking to do. That break, retest, break at the 8, you're like, yep, I'm in, because I know the daily follow through is going to be pretty massive, and that's exactly what it does. For Microsoft, we also have Mr. Apple in the mix. And then we'll take a look at everyone's favorite NVIDIA. Yeah, so weekly chart for Apple, little less on the pro side. It's a little bit more on the negative side, because why? I mean, you have a long-term trend with its deep ranging rotation, right? That's something that to note. Do I see this potentially just breaking to new highs? I mean, it could. Like, anything's possible, but in my experience, if I'm seeing like a double bottom, triple top here, I would be less inclined to want to buy this. If I was going to buy, I would have been buying back here, especially after this candle and a break of high here. Even in a name like Apple, as far away from the 8 and the 21, I would still buy that. It is Apple, and really profitable, really name brand. People are itching to buy Apple and get in at any dip. So yeah, it's not bad. If you start seeing it rotate to the upside, then yeah, you'd want to take that. What do we have? Oh, CRM and AC and CRM. So on here, on the other side of the equation, ACN. We'll pull this bad boy up here. Not looking too hot, right? Not looking too hot at all. If same thing with Microsoft, if you were looking for a potential 3-day potential play, right? This kind of narrow down on the daily. Look to it for the break. It already gave you the signal on Friday. So if it stays and it kind of opens within this range, it's already not bid and ask is a little low from close, so it's already moved down to this area, right? Hindsight is 2020. I didn't notice that until I actually pull up the video. But the reality is after the break on Friday, this play going down to the downside is pretty much in line with kind of what makes the most sense here. We can actually pull that up over here. There we go. And we could see that, yeah, after the break, ACN is poised to continue pushing to the downside. Its bid and ask is it's wide bid and ask. Never mind. So my thinking, and we can play this out forward on Monday, Tuesday, whenever we make a video. My thinking is it after the break, it completes the low. How long did it take to get up to this point? About 3 days. So it takes about 3 days of trading. That's our thought is, just to complete the rotation. Once it does, you get out, move on to the next play. We have next on the agenda. If you guys have questions for me or anything like that, or you're like, hey man, how long does this take, or how much capital, like those kind of questions, it definitely depends. But I would say if you have like other questions other than that, like how to set up your charts on Thinkorswim, how to set up your charts on maybe NinjaTrader or Sierra charts, you can ask me about some of that stuff. We can definitely go through it, because I really just like helping people set their stuff up. I do it for a couple family members, and we talk about the charts and stuff like that. So everyone's favorite NVIDIA, right? The heroes of the market. Now here's the problem. Right, NVIDIA is probably the second most valuable company in the world right now. I don't know which one's the first, but I know this one's the second, according to some article I read. They have a 10-to-1 split coming up here I believe, on the 10th. So that is coming up on the weekly. That's coming up here on the 10th. But what I've noticed though is, yeah, the video is pretty extended, guys. So don't get caught up in the hype train. In fact, like if I was looking in and I was a hedge fund manager, I would be looking to maybe sell calls at this level and into um, the split. Right now, that might be a bad idea for the perspective of, hey, it's Nvidia. But if I was just looking at a technical chart on Nvidia, I would say, yeah, super parabolic. I'd be looking for a break of the low, maybe retest head and shoulders pattern, something like that. If it starts breaking this rotation, yes, I would definitely be looking for maybe to sell calls here or to take a put credit spread vertical on that bad boy. So this is something to think about, man. Buying, just keep buying highs, even after the split. Now, having said that, this is after the split, just looking forward, leaps for the year for Nvidia. So let's take a look at, to have some fun here. Let's see what we got. This is the 18th, so let's say we go 300 days out, see what those contracts look like on the buy side. So you're looking on the call side at calls for 37, basically 3,700. If you take a 50-20, right, it gets a little cheaper into the 2,000 range. I would say, but that's for a whole year. So let's say, for example, $2,000 Nvidia calls for the whole year. Could you ride that going into the year? Second most valuable company in the world? Yes. Now, would I do that just immediately right now? No. But the idea of being in at basically $100, it's almost like looking at Tesla when it was doing all of its splits, right? And where did it run from there? Having that for the year would be pretty nice, right? Actually, I think we can go. I don't want to do it on here because I'll mess everything up, but we'll do it on here. So if we, let's say, for example, we take into account, well, no, actually, take that back, sorry. We'll do this, TSLA, Tesla, boom, boom, boom. Right. If we look back at some of the split action, we might have to go farther back because it did just 3-to-1 split here, but before that, it was doing a slew of splits. Let's see, for the year, can we do it farther time frame? Let's do 3 years, 10 years, 5 years. Cool. Do 5 years. Okay. So yeah, that 5-to-1 split happened here, right? Remember, 5-to-1 split happened here. It was already in a pretty elevated state when that 5-to-1 split happened. Stay with me, right? Already in elevated state, Tesla was making waves. The whole world was all into Tesla, right? From there, it pushed out of that 5-to-1 split and just took off for the rest of the year, right? It's almost like a buy and hold for the year. And I mean, what was this? This was 9/7. So basically, September, October, basically it ran to the other end, basically to the year. So within that year, just nonstop running from that show of strength after the 5-1 split. That's my thinking. Okay, that's my thinking. Not to say that can happen. It could absolutely falter. Remember, invest wisely. But seeing this and seeing what Tesla did running for the year, I could see, if you have some money, dry powder, Nvidia after the split could be a play that you execute even at the highs. Now, I would not execute that when it's at the high of highs. I would wait till it kind of pulls back into a range of sorts before I did that. But once it kind of does that, like let's say it pulls back here, oh yeah, absolutely, definitely would be looking to do that because you want to see how everyone reacts after the split. But once people start getting their money together, news starts coming out, more things on Nvidia, and you get a buy confirmation, it's kind of a no-brainer. It's just something to think about, right? For sure. And it's something that we're looking at too. So we might hit some of the plays that we've got, and then we'll call it. So Meta, something that we're in. We got Meta here. It actually traded, kind of took a little bit of a dip on the last couple of days, but has since kind of stayed up here. So we caught the break, which was a weekly buy for us in the lower part of this rotation. Got a pretty good spot on the rotation. Our thinking is, right, we were looking to roll it at the, we were off by 10 cents, but we were looking to roll it kind of at this level. Our thinking is if you can complete the rotation to the upside with XLK and the Qs kind of at their highs, that'd be nice. It is kind of lagging, so we'll take some of the laggers. We also have CCL, Carnival Cruise. Okay, very similar. Come bouncing off the bottom of this rotation. We wanted potentially to take this rotation back to the upside, or at minimum, catch this last pivot high. So I'll put an alert here to see if we can catch a roll of this last pivot high, takes them off the table. It did push. There is some pullback happening, so we're taking some heat over the last 3 days. But that first day and that next day push was gorgeous to kind of get us out of the hot zone there. Remember, we still have our stop right here on the weekly below previous week's low. And then you have a nice support beneath that. So we'll actually put the support level here so you can see what I'm talking about. The reality is if we can continue to push, that'd be awesome. Not looking for too much though. Looking to roll and take some off the table here and even here. Not even waiting for it to get up to highs. Because remember, this is a very wide rotation. So we could get slapped. And I actually put, one thing I didn't want to do is get confirmation bias, like, oh yeah, it's gonna go up. I put this here to let you know, hey, this might be just on track to sell off. There is some selling pressure. So don't just think it's gonna go to the moon. There's some selling pressure here. Okay. But if it breaks, retest, even on the trend line, don't really use trend lines too much as regards to invisible lines to show buying pressure and selling pressure. It's just to get me looking at the markets the right way in a non-biased approach. Is there buying pressure? Can I showcase that with lines? That doesn't mean that necessarily the market will respect that line. It just means that keep in mind that there's buying pressure or selling pressure happening in general at this level that you can see without seeing system profile. We already took a look at Tesla. We'll take a look at Charles Schwab, and then we will call it a night. So good old Schwabi, right? Schwabi pushed and pulled back. That's really all you really got there on the weekly. It does have, in general, it is in a defined uptrend, provided by the average true range. About volume is green, so it's got something going for it, but who knows? It could chop sideways here, and that'd be unfortunate for us. But the reality is after it took this little bit of a bite, we hope that it can push out of here. What we're not hoping to see is this, right? It took this bite and then trends kind of slowly pushing down for the next 3 weeks, right? And then we have to wait for another buy trigger. But ideally, for these three, it was below the 8, and then once it pushed above the 8 pure moving average and outside the ATR, it did end up going over the next 3 weeks. Kind of what we're hoping for. If we get it, awesome. If it doesn't happen, awesome. But a change in market structure, it is in a strong uptrend. Did give us a buy trigger. We took the buy trigger. So guys, thank you so very much for joining us. I definitely appreciate you guys coming. For any of those who are watching that are getting a lot of these videos, awesome. That's good. If you stayed to the end, we might start doing some bonuses for you guys. If you shout out the video or stay to the end, we might give you guys some of our merch or anything like that. We actually made some really cool cups. Might show you that on the next video. And the next video that's coming out, we'll definitely be talking about the new tool that we'll be acquiring. So this is your boy MC Fire. Thank you so very much. I love sharing these videos. You guys have an awesome day, and goodbye.